Hey everyone, welcome back to another video on the channel. Portfolio is currently sitting at $9,320.57, down about 90 bucks for the day, or 1% or so. For the week, we are down 330.84 or 3.43%. For the month, we are down $540.90 or 5.49%. For the 3 months, we are down $159.70 or 1.68%. For the year to date, we are down $361.32 or 3.73%. And for the 1 year, aka the all-time chart, we are up $257.44. So still hanging on to that green all-time, but we have had quite a sharp drop-off in the overall market in this past few weeks. Basically for the month of April, it's been a pretty sharp downturn. We can take a look here, down about almost 3.5% for the week on the S&P. I guess that's exactly what my portfolio is because I'm all in the S&P. But yeah, no, you can see we peaked at being about up 1.7% at one point at the end of March to down 4.02. So quite a sharp change of almost 6%, which is pretty crazy. But you can see we're unfortunately pretty far away from that 10K mark that I was hoping to reach in a coming video. I know I mentioned that last video back when we were up somewhere around here, I want to say. I think we were up $830 or something. So we were super close, and I totally would have been able to make it had the S&P not pulled back so sharply. But due to this big drop off here, unfortunately I can't make it to 10K probably anytime soon. I missed one weekly deposit because of some cash stuff going on. But I do have about $300 I can deposit right now to sort of catch up a little bit, but that'll only put me about $9,600, so we'll still be a few hundred off from that 10K goal. But it's all good. It'll just take a little bit longer to get there, and it does mean we can actually invest more cash at a lower price. So if anything, it's actually for the better. But yeah, so not going to reach that anytime soon, unfortunately, but I'm sure in the next few months we can definitely get there. But yeah, let's see what else there really is to talk about. I believe this big fall off is because of some conflict in the Middle East escalating, as well as issues with an inflation report that recently came out as hotter than expected, which ended up causing the Fed to sort of push off the idea of rate cuts for the year and basically kind of just draw back their expectations quite a bit from what they were previously due to that hot inflation report, which has caused, and especially, you know, compounding that with the conflict I was talking about in the Middle East, it's really cratered the markets quite a lot recently. So yeah, there's been quite a sharp drop off, like I said, but it's kind of about time. I mean, you could see it's basically been going up since October of last year, which is kind of ridiculous and really unsustainable. So I mean, it's healthy for this to happen. It's really needed. There really has not been any kind of pullback for months, which is absurd, but it's needed and it's finally here, so that's great. So we're just going to coast through this and keep on buying, keep on dollar cost averaging. But yeah, not much else to talk about, and I guess I'll see you in the next video. So thank you so much for watching, and I hope to see you in the next one. Goodbye.